Happy Friday, traders. It's 8 a.m. Chicago time on the 26th of January 2018, the last Friday of January 2018. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, allocating to risk again. We're pushing above the prior day's high on the S&P, as well as the NASDAQ. The NASDAQ is enjoying a boost from Intel. Overall, the laggards this morning, 10-year notes, U.S. bond, the U.S. dollar, gold. It's just a clear sign that the market's risk appetite is back from the last couple of days of quick selling. That's what we've got. As far as what we're looking for on this session that might impact us. This morning we got GDP. I posted it on Twitter in real time. That caused a dip, a quick dip of about 3 points in the ES, and we're back. We're trading 28.50, just above 28.50 right now. 28.50 was the scene of the crime, or SOC, for that release. So that's done and over with. Looking at the calendar, there's really nothing else for the day on schedule. So not expecting much there. As far as what we're looking for yesterday, to get right into it, as far as what we're looking for yesterday, the key trade idea was because we were opening out of range on the higher end in value, we were looking for a push through all-time highs and in the market to fail. Remember yesterday I was saying that I was looking for the market to fail back in as it pushes higher, and I've highlighted this throughout the week on my Twitter stream with bookmap images, screenshots of my trading platform to show that the market is, as it pushes up, it's embattled, and it's tending to now move down more easily. The rotations are expanding to the downside just slightly. So that's an important metric to note. But there are some more important things to cover today. As we look at the 3-day picture, I think some interesting stuff is brewing for the beginning of February. Before we get into that, and just as a shameless plug, I guess, I'd like you to take the time to just hit the like button. It is Like Friday. It does help me out when you hit the like button. Please do so at your convenience. It's underneath the video on your YouTube screen live. Even when you watch this after it's done, please hit the like button whenever you watch a video. I'd appreciate it. So yesterday's plan, push up into new all-time highs, then get an impulse response down, responsive, and then get down into the value area and bounce back up for a three-pronged profile. That did not happen. We did not have the guts to push up yesterday. What we did instead was we pushed lower. Now the market, again, the rotations are getting wider on the downside. So you probably noticed the last couple of days, my estimate, my plan for how far the downside is likely to reach has been relatively conservative, built on what we've had for the last few weeks or months. But the market's exceeding that. So yesterday's plan was dead on, looking for a tight open and an immediate selling response down to 28.41. I highlighted yesterday the fact that our most traded price is right in this area here. Right in this area here, these two pink lines, those are the points of control, 2 days in a row, right on top of each other. So I expected it to get tested and hold before we got an impulse up and then potentially continuation higher to 57 on the close. This part did happen, but the market dug a lot deeper into the buy side, into lower prices, and so we were not able to see the side of it, which is fine. But what's interesting is it repeated the same action we've had for the last couple of days, with the point of control again being right on top of 2840, right? 2840. So 3 days of the point of control right in the same spot. That's just one factor, okay? The market finishing on top of mid and VWAP the day before and yesterday, complete balance. A profile that's somewhat Gaussian yesterday and the day before with some wings. So what we have here, if you look at just the profiles, let's do that. Let's eliminate everything but the profiles. If you look at these profiles, you can see that they are right on top of each other. And so when we merge them together into a micro composite, you'll see that there's a fair amount of volume that occurred right here in the 2840 area, which, as I said yesterday afternoon, is consolidating or winding for a very likely vertical break, probably to the upside. But when the market does this, it generally has the energy to push the shorts out to the upside or push the longs out to the downside. But in either case, the expectation for early next week, if not today, not likely today, but for early next week, I expect a vertical move, a large day, a large range day to come. So, with that being said, what we have is a market that's stacked on top of each other. On top of it, yesterday, both days had this very similar response. So yesterday's primary scenario is basically a duplicate of the prior day. Push high and then drop. Yesterday was expected to push high and then drop. Yesterday, push high and drop. And then yesterday what it did is it dropped right off from the start. And it ended up regaining the mid, which we did the day before as well. And what it's doing is it's rejecting tests lower. See that? When we get lower, it starts to find those buyers, and we're rejecting tests lower as we go lower and lower. So yesterday was a lower high, higher low, inside day to the day before, winding with the point of control right on top of each other. This is all coiling for a big move next. When we look at the overnight, as a part of our analysis here for what the context is, also interesting. Let's set this up properly. So you look at the overnight. And we have it opening 2 nights in a row, 3 nights in a row on top of each other. Okay, the 23rd, the overnight session opened right here on this dotted green line. 24th right there. And then the 25th right here. The overnight session repeating the same process again and again and again. Same thing, going sideways. And then force up. Sideways. Force up. Sideways. Well, it forced up, then sideways, then forced up. But the same structure 3 days in a row. And we've rejected that structure and sold off the last 3 days. Okay. So what are we looking for today? More of the same. More of the same. This morning, we're trading right up here. Open auction. Looking for open auction, looking for responsive selling. I don't expect it to get too far. Consolidate, impulse up, and push to 57. That's the first trade idea. Okay. Secondary. open, initiative, push up, 57, consolidate, fail, push lower, balance out for a double distribution day at the end of the day. That's 2. That's how things are rigged right now. If we do get a vertical day today and we open above the prior day's range and we break higher, we get initiative. Do not sell. Do not sell. It's going to have a lot of power in it. Just knowing not to sell is enough to save you a lot of trouble, especially on a Friday when it's very, very difficult to recover. So if we get initiative and you see it pushing through and aggressively, it's not a good day to sell. It's not a good day to come back and try to trade from the outside in. Okay, it's important to see that. For this failure trade here, for the reversion, I'm not going to try to guess where the top is. I'm going to have to see the impulse first. So I need to see the impulse, and then I'll trade the pullback of the impulse rather than trying to get in before the impulse happens. Okay? So that's what I have for you. The other thing I wanted to cover real quick, just an overview. I haven't talked about Bitcoin in a while. Overall, I'm still on the side of this continuing lower. It is showing weakness. It is getting less and less participation. I'm reading more and more about people who are panicky. The fact that it's not making them 14% a day or whatever. But overall, there are a lot of weak hands in Bitcoin, especially. Ethereum is a little stronger, but there are a lot of weak hands in here. But the fact is, you need Bitcoin or Ethereum to trade a lot of the other altcoins anyway. So there's a little bit of demand here. But overall, I'm still expecting 8,500 as a likely test and consolidation area, and then likely 5,000 on Bitcoin at some point, unless something changes. I see a market that is over. This is a mania. This is not sustainable. Products do not. Pretty much anything does not withstand that. So we need to come back and not need to, but we're likely to come back and test the base. And that's all the way down to 5,000. I'm not bearish. I'm not saying I'm bearish on the product. Now remember, when it comes to crypto, you have to separate two things. You have to separate the speculation and the cost of the coin versus the value of the technology. The technology is outstanding. I love the idea that there isn't some, like Mnuchin has been talking the dollar up and then backing off. I love that there isn't one person or group controlling this, that it is distributed. I love the technology of it, the fact that you can move money around without having to pay all these ridiculous international wire fees and things like that. The technology must be separated from the value of the coin. The coin took precedence because of this mania, but the technology is still valid, and I think it is the future. This is the Internet of currency. This is what this is. It's not some crazy idea, harebrained idea that's going to go away. I don't think it's going to go away. Now, I'm not a huge advocate for trading Bitcoin, but it also presents some interesting opportunities. But again, you need to consider the risk. Only risk capital should be invested in this if you are speculating. The main ones that I pay attention to are, of course, Bitcoin itself, Ethereum, and XRP, which is Ripple, and IOTA. Those are my thoughts on crypto if you wanted them. Here's what the book looks like in there. It's just, it's fallen off the 11,000 handle, has been struggling between 300 and 600. on the $10,000 handle. But overall, it's swinging back and forth, back and forth, back and forth. And it's very, very fast. It's again, this is not for the faint of heart. Okay, I'll leave you with those thoughts. It's Friday. Good luck. Mind your risk, and make sure you don't get emotionally involved with your trades. Good luck.